Well, welcome.
Good morning.
Good morning to both of you. This is very exciting. We really appreciate you taking the time to talk to us this morning. Mr. Chairman, I don't think we've had an SEC chairman here for a few years, so it's really quite an honor.
Well, it's nice to be here. Thank you.
So we heard that the code word was boy for this session. And I know I'm sorry, the code word for this session is speak. I apologize, speak. So make sure you write that down. And I know that you probably have something that you both need to share with us before we get started in the form of a disclaimer.
I'll do the work. Our views are our own, not necessarily those of the commission, commissioners, colleagues on the staff. We speak for ourselves.
Very good. So I'm going to start with you, Mr. Chairman. On several occasions, you have laid out some principles, some core principles that will guide your leadership of the SEC. So could you share with us the ones that are most relevant for this audience, please?
Sure, happy to do so. And I laid out those core principles several months after arriving at the SEC. And I want to say they're my distillation, but my distillation of my interaction with the staff. And that was very valuable. A few that are really important. One is that our mission, I think it's a well-defined mission. It's a mission that has served the commission well, and that remains the touchstone: investor protection, capital formation, market integrity. The second thing, and I'm happy to say that I think every day my belief in this grows stronger as you deal with different constituencies, and to use the vernacular, everybody we meet is talking their book. If you take it back to what we're trying to do mean for the Main Street investor, or as the phrase we coined, Mr. and Ms. 401k, it does give us a real grounding. And when someone is talking their book, say, hey, talk your book in a way that reflects what's important for the Main Street investor. And then, actually, just two more quick things. One is, we really need to make sure that our regulation of the markets and our regulation of the industry and for the people in here matches the reality of today. That's another question to keep asking ourselves. And a last one that maybe we'll get into as we get into to more granular subjects is, when you have a really good thing in the marketplace, and maybe we'll touch on audit committees a bit. I think audit committees are a really good thing. You have to maximize the value of that thing, disclosure being one of them, audit committees being another. You have to be careful not to overload it and dilute the real value that gets delivered. So those are four things that together we're trying to bring to the commission.
So you mentioned one of the core principles of the SEC is capital formation, and you in the past have expressed your concern about the declining number of public companies in the United States, which I think gets to capital formation. Talk to us a little bit about why that is such a concern to you, and maybe some of the steps that the Commission under your leadership can take to maybe address that decline.
So let me say a few things that don't bother me. It does not bother me that we have robust private markets, that the private capital markets provide, a great deal of lubrication for our economy. If you talk to central bankers around the world about post-financial crisis growth in various economies, one common theme that emerges is the dynamism of our capital markets, including our private capital markets, helped the U.S. economy come out of that recession much more quickly. So I don't want to do anything to impede the private capital markets, which have been an engine for growth. It does bother me that our public capital markets are relatively less attractive. And one of the principal reasons it bothers me is they are the most efficient space for retail investors to invest in the growth of America. You can invest, for under 100 basis points, substantially under 100 basis points in a lot of different vehicles in the long-term growth of the American economy. In the private sector, as a ordinary investor, That kind of opportunity is not less than 100 basis points. It's 500, 700, on an annual basis. We all know, we can all run the numbers, that is a huge delta. And so we need to, for the benefit of our Main Street investors, find an efficient way for them to invest in the American economy and the global economy. So I don't know, Wes, if you want to.
Yeah, just building on that, it then follows that the role of the disclosure package, whether it's in the private space or the public space, the role of audited financial statements is really important. And certainly many accountants, I'll say most accountants, have a role in both sectors of our capital markets, both the private and the public sector. The work that you do, regardless of whether it's directly within our jurisdiction or outside of our jurisdiction in the private markets, is no less important. The quality of the work that you do, the integrity that you bring to it, the independence and objectivity that you bring to it is fundamental to the disclosure that investors rely on.
Well, you are addressing a group of CPAs, and so you mentioned the audited financial statements, but what other role do auditors and accountants play in helping the SEC fulfill its mission, its three-pronged mission?
Do you want to take that one? Or?
Yeah, happy to take that one. The role of our approach within the markets, of course, places a central and a core focus on audited financial statements. It lies at the center of our disclosure approach. And then it follows that really the role of accountants within the preparation of those audited financial statements is critical. Accountants are really involved at every stage of that process, whether it's standard setting, whether it's preparation, whether it's auditing or governance through an audit committee or other means. So the work that you do is critical in the investor protection within our markets. I would also say just in focusing now on the SEC's approach, we hold professionals to a very high standard. And I think that's a good thing. It really marks the importance that we play as we work together toward protecting investors. So certainly we appreciate the work of accountants, auditors, and others involved in that governance process. But that central feature will certainly continue.
Yeah, I can't emphasize enough that we have a disclosure-based regime, and the bedrock of that disclosure-based regime are audited financial statements. So, said another way, when I was in the private sector, I often judged the quality of a company's disclosure by how consistent the qualitative disclosure was with the audited financial statements. You can really tell if people know what's driving their company and are able to articulate it to investors, the extent to which those are in sync as opposed to out of step.
Well, I think we're all very fortunate to have an SEC chair who understands and appreciates the importance of audited financial statements, so thank you for that.
Absolutely.
So I do want to touch on this topic with both of you. This is the 15th anniversary of the passage of the Sarbanes-Oxley Act, which of course transformed the public company auditing profession. And we know that investors very much value the safeguards that Sarbanes-Oxley put into place. So I'm curious if you can share, both of you, your perspectives on what Sarbanes-Oxley, the most critical pieces of Sarbanes-Oxley to our markets. Mr. Chairman, I'll start with you.
Sure. So for my money and from my experience in the private sector, the dynamic that Sarbanes-Oxley established between the audit committee and your outside auditing firm was critical. And I think by far the most bang for the buck to have established that here you have a group of people with a clear mandate. The ability to influence the selection of the audit team on behalf of shareholders, it has, I believe, changed the dynamic for the positive. And I know we have put more responsibility on audit committee members, but I think that that cost, the benefits of it, are incredible compared to that cost. And I appreciate that audit committee members, in most places I've seen, have stepped up to that additional burden. And I think 15 years later are doing a fabulous job.
So I know I want to bring you in on the conversation and build upon what the chairman said. You spend a lot of time talking to audit committee members about what keeps them up at night, whether it's cybersecurity or all of the things that are on their plate. What are you hearing from audit committees about the work that they do today?
Yeah, well, I would start with they're engaged, which is terrific. The work of an audit committee member is perhaps never ending, and they're engaged and focused. A couple of things that I would describe that's really capturing their attention going into this year end. Certainly top of that list would be the new GAAP standards. Revenue recognition is going into effect for most public companies beginning with their reporting in 2018. And that really brings into focus all of the implementation work that's occurring across companies, the interaction between management and the auditor as they understand the risks, as they understand the disclosures associated with that. And Jay, back to your point about consistency, the new RevRec standard introduces an opportunity for even greater consistency between management's business as they describe it in MD&A, as they describe their activity, their backlog, et cetera. So much greater consistency between that and the financial statements. And good audit committee members are focused on good implementation that's consistent in describing the business to investors. One of the other areas, Cindy, that audit committees continue to focus on, and I think appropriately, is understanding other sources of change. The new PCAOB Auditors report has really a three-phased implementation, starting with clarifications that go into the auditor's report this year. Then there's critical audit matters that come into reporting in the following years, depending on the size of the company. But this is an opportunity for many audit committees to spend time with their auditors on a dry run basis, having a good discussion about how that report will come together and the kinds of communications and the timing of communications that are important to good implementation. So new GAAP standards, auditors report, and then last I'll mention there's a whole array of other sort of external effects, whether it's potential tax law changes, whether it's cyber that impacts the financial statements. There's a number of other areas that require a good focus from audit committees. And I'm pleased that leading audit committees are focused. They need to be focused. And they're focusing, importantly, on communication among the auditor, their advisors, and management.
So to pick, did you want to weigh in?
Do you mind?
Not at all.
So,
this is your stage.
No. I want to follow up on what Wes says and talk a little bit about how we interact.
Yeah.
We talk about the new revenue recognition, leases. We talk about these things. The question that I ask is this change going to bring financial reporting closer to how management runs the business? Mm-hmm. Because I look at it the other way. The problems I've seen over the years and the ones you want to avoid in a disclosure-based system are when your disclosure doesn't reflect how management looks at the business. And even worse, when you're managing for a particular disclosure result that is divorced from how you would want to run the business. Right. And so when we talk about these things, and I hope that audit committees, when they are talking to their auditors about implementing, are asking and having that debate. Mm-hmm. And same goes to critical, the CAMs. How are we looking at the business? Mm-hmm. And can investors understand that?
Well, I think you gave a great statement when the SEC approved the new auditor's report, and so I would urge all of you to go reread the chairman's statement on that. I think you gave us really good advice as to what your expectations are and what your hopes are, so thank you for that.
Well, thank you. Like I said, if it results in quality, I'll be happy, and if it results in boilerplate, I'll be really bummed out.
Yeah.
You both touched on, and I want to ask a more pointed question about audit committee effectiveness. How have you seen that change over the last few years? Because of course, given their critical role, they're only as good as the audit committee members.
Maybe I'll start. Audit committee member or audit committee effectiveness is really an important consideration for the board as a board, but also for the committee. And so one of the areas that we've certainly engaged with audit committee members about is the awareness and the training that really goes into any given member's ability to bring forward their understanding of the business and the context of the accounting and the auditing as applied to that business. So one key element of effectiveness, training and awareness. There's a clear opportunity for good communication from auditors, from management accountants, from advisors and others to ensure that members have the right knowledge given the pace of change. One of the other areas is also to take a look at the composition so that there's a good quality input, diversity of thought that's really brought to bear on the committee discussions. And then last, sufficient time to land on the important issues in the discussion. And so I'll say quickly that committees should really assess whether they're landing on the right issues. Of course, from a standards perspective, there's required communications and so forth, but we don't want that to sort of overtake the good judgment of committee members and landing on the most important issues together with good dialogue with external auditors and others about how to really provide effective oversight to financial reporting and oversight to the selection, retention, and compensation of the external auditor. Those are fundamental pieces.
I would just add that, like many things, there's not one size fits all. Mm-hmm. There's not one particular structure of an audit committee, whether it's 3 members or 4 members or a subset of the board or almost the whole set of independent directors. Different industries, different companies, mm-hmm. Not just in this area, but in lots of areas. I want to make sure that our rules and the way we enforce our rules doesn't dictate a one-size-fits-all, because companies can be vastly different, personnel can be vastly different.
Yeah. Maybe just drawing on that important theme then is the relevance of disclosure. The audit committee report, together with the auditor's report, will convey and should convey the relevance of both of those groups, adding to investors not only what those groups do, but how they do it. That's important texture then for investors to gauge the governance and the audit quality that's been built into any given company.
Well, I think that's going to be particularly important as the new auditor's report goes into effect, which then has the auditor disclosing the length of tenure. But of course, that's a data point where the audit committee can provide that texture and that context. So we hope that we see a continuation of that upward trend in disclosures by audit committees. So I should have mentioned to the audience that we will take your questions. The chairman has graciously agreed to take some questions at the end of our session, so please do submit them. And we do have a question that's related to this, and that is, as we talk about the new auditor's report or revenue recognition, have you heard a lot from preparers and from investors on these? I know you do a lot of outreach, both of you, to various constituencies, not just the CPAs. So what are you hearing from investors in particular about how these new standards will help them?
Do you want?
I'll get us started. In terms of the new GAAP standards, disclosures that are introduced by those standards are really important. Take RevRec as an example. Today, under our revenue standards, there's not a comprehensive package of disclosures that accompany top-line revenue. The standard setters focused on that, in addition to all of the changes for recognition and measurement of revenue. They also focused on a comprehensive disclosure package. And that's one that investors are taking advantage of, they're focused on, and has real promise for understanding the way management is entering into contracts with its customers, structuring those, the balance between fixed and variable compensation or consideration, and so forth. So the disclosure package is really important, in terms of the new standards, whether it's again revenue, leases, or the financial instruments and CECL standards.
I'm glad you went first because my answer still is that investors have been, at least to me, and you always worry when you don't hear any bad news, but investors have been pretty universally positive about
Right.
all three of those.
Yeah. I would say, just as we move into the implementation of those transition disclosures, are an opportunity for companies, really an expectation for companies to provide the marketplace with information about the anticipated effects of those standards so that investors have time to absorb the information before it shows up in the primary financial statements. So you'll hear us throughout the day talk about the importance of SAB 74 disclosures. It really does serve an important part of the overall transition effort.
Well, while I have you both up here, I would be remiss if I didn't ask you about the PCAOB and its role in audit quality. So as we are celebrating or commemorating the 15-year anniversary of Sarbanes-Oxley and the creation of the PCAOB, I'm curious as to both of your views.
Well, why don't I start, and you can fill in. It is a very important body, and I think as folks know, Chairman Doty is coming to the end of his terrific tenure leading the PCAOB. Wes and I and Kara Stein and Mike Pivovar, my fellow commissioners, are working hard to populate the board on a basis that's forward-looking and reflects, at least from my perspective, I won't speak for Kara and Mike, the critical role of the PCAOB in two areas, and then I'll let Wes. One is internationally. I'm gonna take a few minutes here. The amount of U.S. investment dollars being devoted overseas, directly or indirectly, particularly on behalf of what I call the retail investment community, including through pension funds, is only increasing. I believe, I firmly believe that our financial reporting and our audit standards are the best in the world. I may be biased, but I do have the benefit of having worked around the world, and that work has only reinforced that view. I think it's very important for the PCAOB to have a leadership role, and in particular, a leadership role around auditing standards. Wes and I both think that is an area where the PCAOB should continue its leadership, and as we were talking earlier, as markets around the world evolve from pen and paper to electronic data keeping, et cetera, the PCAOB's role around standard setting is going to be extremely important. So I know you have strong views as well.
I get choked up.
They're that strong.
Well, thank you. On that front, whether it's the PCAOB playing a central role, and they do play a central role in advancing financial reporting and the quality of audits, both here domestically as well as internationally. They also collaborate with international counterparts, just as we at the SEC also do. That collaboration is an important investment of resources and time to convey really our experiences that we've developed over time. Experiences in the quality of the underlying bookkeeping, so books and records requirements, the audit process, the delivery process. That collaboration is important. It's also just coming back to other areas within the PCAOB. The inspections program also serves a really important role, providing feedback both to auditors, audit firms, as well as to the PCAOB and to us about areas where judgments are being sustained on the positive side, as well as where judgments aren't being sustained, so that we can all ask the collective question of why the judgment wasn't being sustained. So the inspections function is critical, and I know you'll hear more from the PCAOB about their work in that area. Also, the discipline process of focusing on the appropriately high standards that we hold all of ourselves to in the work that we do, so that we continue to earn the confidence of the investing public in the numbers. There's probably no greater risk to the profession than for the public to lose confidence in the numbers. And so, Cindy, I'm reflecting on one of the charts that you had, which conveys confidence in the numbers. I think that's a good output measure. Another good output measure is the decline in restatement rates over time. We're at very low restatement rates. That's a good thing, because those in each of those restatement situations, it's an opportunity to learn how to avoid those situations. And so really across the PCAOB's work, I'd be remiss if I didn't mention their economic and risk analysis work that helps them keep focused on areas of emerging risk, as well as areas for continued focus. So those are just a few of the very important functions of the PCAOB, and with Jay, certainly look forward to the PCAOB continuing to serve in its critical role.
So, Mr. Chairman, you mentioned the heavy investment by U.S. investors in overseas markets. So that leads me to a question about international accounting and auditing standard setting. Of course, we have the PCAOB, who sets standards here for auditing, FASB that sets standards for accounting. But what is the interplay and the importance of those other standard-setting bodies to our U.S. markets? I'd be curious to hear both of you on that topic.
Picking up on what Wes was saying about the PCAOB, and I think you can bring, not you can bring, you should bring, we need to bring the international standard setting body into this. It's an overused word in business and in politics, but the ecosystem, it depends greatly on communication. And when any of us is taking a more siloed approach, it would be a mistake. Let me speak on behalf of the United States. It would be a mistake for us to say it's our way or no way. That's because then you get divergence, then you have no communication, and that's when investors who we're serving at the end of the day can't do the comparisons they need to be able to do. So our international counterparts are of course important and becoming increasingly important. But the fundamental way to deal with that is through communication. Now, and I think as we move forward, that is particularly high on my agenda. I know it's high on your agenda.
Right. That's right. Sometimes the discussion gets oriented around a single standard for accounting or a single standard for audit, and tends to miss the nuance in Jay's point, which is the implication shouldn't necessarily be a single standard setter, but instead there should be good collaboration, good communication, good cooperation so that the experience that we're developing and have developed over time in our domestic markets is really brought to bear in an international discussion. The second piece that would just sort of encourage everyone to consider weighing in on is a public consultation that's occurring right now regarding the structure and the governance for international audit. It tends to be one that doesn't gather as much attention in the US, but I would suggest it should. We have a good base of experience, a foundation of experience to bring to bear on that discussion. You'll hear more about that in later sessions.
And that's the monitoring group's
That's the monitoring
consultation.
group. That's right.
Very good. So we have a few minutes for audience questions, and then I'm going to call a bit of an audible and surprise both of you, and ask you for parting thoughts. So I'll do the audience questions, and then I'll ask you both to give us your parting thoughts. I was going to ask you your favorite restaurant in Washington, so you can make it fun or you can make it serious. But I do want to take a couple of the audience questions. Actually, I have 3, and we've gotten to 2 of them already. So the one that I want to ask that we haven't touched on is the SEC planning on issuing any kind of guidance on Bitcoin or digital currencies? It's something that's been in the news a lot. We heard Kimberly speak about it. So I will open that up to both of you.
You're going to leave that one to me, aren't you?
That's why they pay the big bucks, Mr. Chairman.
So like, to try and level set let's call it this, and there are technologists in the audience and who will say I have this all wrong, but we're talking about distributed ledger technology and the use of distributed ledger technology for a store of value. At one end of the spectrum, you have the pure virtual currency with Ether and Bitcoin being the most prominent examples. And then at the other end of the spectrum, you have a distributed ledger entry that reflects what we would all say is an equity security or a debt security. And I've been very public about this. If that's the spectrum, my view is you get to being a security pretty darn quickly, because what you're doing when you're issuing that is you're asking people for their money for you to take and use in a commercial endeavor, with the prospect of increasing the value of that piece of the distributed ledger. I see very little distinction or any between that and handing someone a piece of paper that says, stock, and saying you might be able to sell this for more in the future based on my efforts. So that's where we don't need to do a whole lot. We have a pretty long-standing body of law on dealing with securities. I'll be very direct about this. Now, the securities bar, the lawyers, the accountants can take a little bit of a breath here. They need to do a better job of explaining to people when a piece of electronic code that's a store of value becomes a security, and when a security is being distributed and when there's a public offering. Now, at the non-security end of the spectrum, our work's not done, okay? That's a store of value like cash is a store of value. And we have a number of regulated entities in our securities ecosystem that have requirements when people show up with cash. Well, when someone shows up with, $100,000 in Ether or $100,000 in Bitcoin, the equivalent value, and plops it on your desk, your responsibilities about knowing your customer and other things like that are the same as if they plunked a bag of cash on your desk. So, we do have a fair number of regulations for dealing with that, and I would expect the responsible people in our community, the gatekeepers, to recognize that. I'm happy to take comments in this. I don't see any difference between plunking down $100,000 worth of Bitcoin and plunking down $100,000 worth of cash. So does that answer your question?
I think it does, yes.
Okay,
And
good.
I think we've seen the evolution, right? Because we used to get issued stock certificates, and that evolved, and our laws and the Securities Exchange Act weathered that change, and so there's no reason why it shouldn't weather
There actually are
this.
jurisdictions around the world that don't even have paper, and haven't for some time had paper stock certificates. They've only had, entries in a ledger. May not have been distributed ledger technology, but that's a pretty small step.
And so let me pull it into accounting and auditing. Back to what we previously said, financial disclosure lies at the core of the disclosure package to investors. So the implication of offering or selling a security is that the party needs disclosure or needs to have an exemption from providing that disclosure. That's an implication for everyone in this audience. The second point about custody, of course, accountants play an important role in looking at and testing the controls, the process around custody as well, and providing reports on that. So there's certainly implications here that we've talked about during the year, and we'll talk about, no doubt, later in the conference about the important role that accountants should be playing in thinking about these tough issues.
So I have you for just a few more moments before I turn it over to you, Wes, and your deputies. So I'm going to ask you both for your final thoughts for the audience before we, Mr. Chairman and I, depart. So I'm going to start with you, Mr. Chairman. What are your final thoughts to this audience that I've not asked you that you would like them to know?
I think it's I'll give you a double-edged sword, which is you have very high quality and talented people in the profession. I know that. I've experienced that. I've enjoyed working with members of the profession over the years and appreciate it. Also, what comes with that and what comes with the way we've set up our system is a high level of responsibility. And I would just urge you to continue to bring that perspective to your work and your interactions with issuers. You are gatekeepers, and I want you to continue to discharge that job with a high level of integrity, focus, and commitment. So, and thank you for having us here today.
It's our pleasure. I'll give you the final word. Maybe I should have switched the order and given the chairman the final word, but I'll give it to you.
No, Wes always cleans up my messes.
No.
Whether you make them or not.
I think that works in reverse frequently. But I'll just say, just really building on the tone that you set for your teams this year end is especially important. The way your teams understand the change that's being incorporated into financial reporting, as well as into audit, and how they really do the work. Keep an eye on your teams so that they're really meeting the expectations that the public places on all of us. Take care of your teams, and they'll take care of you.
Excellent. Well, I want to thank all of you for your attention, for your good questions. Remember, the CPE code word is SPEAK. And please join me in giving a hearty thank you to Chairman J. Clayton and Chief Accountant Wes Clifford.
Thank you.
Thank you.
Yeah.
Thank you so much.